Time for Startup Office Hours. Hey, I'm Scott Fox. Welcome to the Orange County Startup Council's monthly free startup coaching and advice hour. Here today to take your questions about startups, entrepreneurship, strategy, raising money, maybe some legal issues. We have a special guest today, Joe Daniels from McCarter and English out of New York, who's a startup lawyer expert. And a bunch of you have written in with questions. And if you'd like to join me on camera today, we'd be happy to see you live. I'm Scott Fox, CEO of the Startup Council. And if you'd like to join us on camera, you can do that here. There's a link showing on your screen. And if you're joining us on YouTube or LinkedIn Live or Facebook or any of those places, you can enter comments and those will show up as questions in the chat, which is right here. And we'd be happy to hear from you and respond to those as well. The idea is to make this as interactive as possible as a free service from the Startup Council to help you figure out your startup challenges and get you to your goals faster. Really about accelerating the ecosystem worldwide so that more entrepreneurs can find success by helping make their dent in the universe. Hopefully make other people's lives better and make some money while doing it. Doing well by doing good. Doing good by doing well. One of those things, right, that people talk about. So if that sounds like you, we're happy to see you and looking forward to this hour together so that we can talk about whatever you want to talk about. So if you are here for the first time, let me introduce myself. First, let's just invite your friends. You can go over to youtube.com/Scott Fox. That's me. That's the easiest place to find us, youtube.com/Scott Fox. And if you comment, like I said, on LinkedIn or YouTube, your questions will show up in this chat room over here. No, over there, which will get going in a minute here, I'm sure. So there we go. There's Yvonne from checking in on YouTube, it looks like. Hello, Yvonne. Nice to meet you. And if you have questions, let's get the chat room going. And let me put that link back on there. The best questions are, of course, those that are live with real people. So if you want to come on camera, you can visit that link there. Turn on your webcam and I'll bring you in here right next to me and we'll have a nice little chat. And like I said, in a few minutes, we'll have a special guest, Joe Daniels, who's an expert startup attorney. He's raised lots and lots of money for startups all over the world, and he'll be joining us for some Q&A as well. So you'll have two experts for free. Pretty good deal there. So so let me tell you who I am, why we do this. So I'm Scott Fox. I'm a serial internet entrepreneur. I've founded a bunch of little companies that you probably haven't heard of, maybe a couple that you have heard of. These days, I'm mostly a startup investor. I'm a very active angel investor. I'm involved in dozens of companies as well as several funds as a limited partner. I've spent many years learning about the internet and business strategy. And these days, I try to spend a lot of my time giving back to the community through local operations here in Orange County, California. I'm in Southern California, as well as online. Now, one of the things, a few good things about the pandemic is that it pushed us all more online. So we're doing this worldwide through the internets to see if we can help more of you. Many of you might be here because of my books, which are over here. These are my books. I've written these 3 books in the middle are all by me in English. The rest are foreign translations, all about how people can find their own way on the internet and start businesses. So if you haven't read any of those, Click Millionaires is the most recent one, and you can get that on Amazon or anywhere finer books are sold, as they say. I'd be happy to have you check that out. And if you want to know more about me, you can go to scottfox.com, or there's a page on Wikipedia about me too. So a couple quick disclaimers. I do have a law degree, but I am not giving legal advice here. This is also not investment advice or financial advice of any sort. It's purely for entertainment. And I'm sure that applies to my friend Joe, who is a practicing attorney. But also, this is really up to you to do your own research and consult professional counsel if you get involved in the crazy things that we're going to talk about today. So why I do this is because I believe in you. And I don't even know most of you, but I think that the world will be a better place if more entrepreneurs make the effort to make the world a better place. The arithmetic seems pretty obvious to me. The world needs a lot of help. And I love hanging out with startup people because we tend to be optimistic and creative, and we actually get shit done. So if that sounds like you, you're in the right place. And I hope you'll invite your friends. Sorry, let's see. Looks like you guys are figuring out the commenting, right? Let me add this one here. Please like and subscribe if you're watching on YouTube, or follow on LinkedIn on the Startup Council page. Appreciate your getting the word out here. And you can join our email list. These are all our little commercials here. I just got to get these out of the way. This session's being recorded, so don't say anything stupid. And what else? There we go. Okay, so if that's helpful, we're going to get started here. And I guess we'll start with in the chat room, because let's see here. check my notes. Yeah. Okay. So here we go. So let's get started in the chat room. I would love to have some of you come on camera. It's just much more interesting. We all get tired of reading texts all day. So let me put that on camera link back on. And if any of you show up over there that have a good question, then we will talk about that. Okay. So let me go over to the chat room here. You guys are doing a great job filling up the chat room. So let's see here. How do let me move this so I can see it. I got this camera in my face. No. Sorry, hang on one more second here. There we go. Okay, well, let's start with, you guys are filling up the chat room. I appreciate that. I appreciate everybody being here, by the way. This is my lunchtime, so we're having lunch together. Okay, Yvonne, you're welcome. Miguel, you're welcome. Rebecca, do you have any recommendations for where to research equity, including distributing it to new employees, negotiating with investors, etc.? Yes, I've written books about this stuff. You need to be a little more specific about researching equity. I'm gonna take a leap here and guess that you're talking about raising money for a startup, and that you like venture capital style, and then you want distributing it to new employees. That means stock option plans, and then negotiating with investors. These are all perfect questions. I'm happy to talk about this all day. We'll also have Joe here in a few minutes, so I'll give an overview, and then we can get more specific with him, I guess. That's three questions in one, really. Researching equity, I think what you mean is finding investors. If that's the case, then Google is your friend. LinkedIn is your friend. There's a service called startupinvestorsdirectory.com that is something that I built, actually, that we're just getting started. You can take a peek at that. It's not quite ready yet. And distributing it to new employees, well, then you're talking about stock options, or really how to share it among founders. The best methodology that I've found, and there are a lot of them, again, Google is your friend, but there's a system called Slicing the Pie. I'm going to duck off camera here for a second and grab this because I get this question a lot. This is Slicing the Pie. It's a website too. The Slicing the Pie Handbook is a useful way. It's literally titled Perfect Equity Splits for Bootstrapped Startups. I don't know if you can see that there. And the author is Mike Moyer. So that might be helpful to you. I've also gotten referrals to comparably.com, where you can, you have to sign up for an account there, but I think they have a free level, and that can help you set up equity splits with your partners. That can be real useful. I was also going to recommend that if any of you are starting companies where you're trying to issue equity, that you should look at services like Carta or capbase.com. I'm an investor in Capbase, full disclosure. But these are services that help you track who you've issued shares to, who owns how much, and especially as that gets more complicated in future rounds, there's dilution to be tracked and things like that. And I would recommend checking out some things like that. And also, by the way, folks who are watching, you can answer questions. You can answer each other in the chat room as well, if that's helpful. I'm sure some of you know as much or more about this than I do, but maybe Rebecca would be pleased to hear from you if you have good ideas about how to do this as well. Okay, let's see. Let's go. And actually, your third question there, Rebecca, you got your money's worth here. Negotiating with new investors. Why don't we table that until Joe shows up, because that's something he does for a living. And I do it as well, but I do it more like for myself. He's the attorney who specializes in that stuff, so that could be helpful for you. Hi, Sandy. Nice to see you. The link is on the screen right now if you're looking to join us on camera. Hello, Scott. Yvonne says, I'm an EdTech founder from the UK, interested in knowing how to find joint venture partnerships as well as EdTech angel investors. Okay. Well, I don't mean to make this sound easy because it's not, but Google, right? How else are you going to find anything these days? I would be real specific. Search for EdTech angel investors. That's where you'd start, and that might get you some big names. The trick, though, is, Yvonne and everybody, a lot of founders waste a lot of time by pitching people who aren't really a good fit. So I know you were just fitting that into this little box, right, Yvonne? But the real question is, how do you find EdTech investors who invest in your kind of EdTech at the stage of development that your company is, like your pre-seed, pre-product, you're in market, you have revenue, you don't have revenue, you're Series A, you're big, you're small. How do you find EdTech investors who are your size, your shape, maybe your country, your currency, right? All these things, and who maybe also have connections in the specific target you have, right? Because ed tech can mean a lot of things, right? It can mean college level, university level. It can mean preschool, K through 12. It can mean like career training, things that are not traditional academia. And that means a lot of things, right? And there are specialists in all these things. The good or the bad of it is that the venture world is so large now that there are specialists in everything. And there are definitely specialists in ed tech as well. Here's the hack, though. This is what I would do, is I would go and find the companies that look most like you, or that you would like your company to be like when it grows up, and figure out who their investors were, and then work backwards, right? So find a company that you think is impressive, and then figure out who their founders were and who their investors were, and contact them, particularly the founders. Sometimes they'll have sympathy for you if you're in the same area. And here's this double secret hack. I answered your first question too. How do you find joint venture partnerships? Same way, right? Find companies that you want to work with, find who the founders are, and especially if they're in ed tech, you might be able to partner with each other, presuming you're not competitive, of course, right? You've got to find people that are complementary. But figuring out who's already done this is the best way to start, because they've already committed, already have expertise, already have relationships. And ideally, you find somebody who's a couple levels above you, so that then you can kind of level up and, help them, let them help you, and you hopefully can help them as well, so that it's mutual. All right. I hope that's helpful for you. Okay. So make you guys a deal. Somebody's got to come on camera here. I'm not going to just talk into the air all day. All right. Somebody, I put it on the screen. So let's go. This is not you want to watch TV, just go watch TV. Okay. Hello, Joshua. Nice to meet you. Okay. How early should you start raising? Okay, Miguel, that's a great question. The answer is immediately, always. Always be fundraising. But that doesn't mean walking around with your hat in your hand, begging for money. What you've got to do, this is a key thing one of my mentors taught me, before you go fundraising, you have to go friend raising, okay? So you got to go make friends, because who gets invested in? People that get invested in are those that people with money like and know and trust. So you can't show up the day you need $1 million and expect somebody to write you a check if you've never met them before. So the day to start fundraising is now. You go out and start making friends. And I've said this many times. By the way, there's a lot of episodes of this show online. I've been on YouTube on and off for 15 years. So if you think this is helpful, go look at the archives as well. And now, by the way, we run there's a masterminds workshops that I run once a month. The next one will be, I think, March 9th, where we do this more interactive. Everybody turns on their Zoom camera and we all talk and help each other. If that sounds useful to you, you can, it hasn't posted yet, but mark your calendar, and we'll make sure you get on our email list. Let me put that up. Make sure you get on our email list, and you'll hear about all these things. Okay. Startupeventnews.com. And that's a form. Just get on our email list, right? And you can unsubscribe anytime. It's free, etc. Okay. So the friends are the key to the whole thing. Most people, I don't know. I was this way too as a first-time founder. It was like, I didn't have the money. The people that had the money were kind of scary, right? It was like a bank or something, and like, so you put on your best suit and you go and you try to impress them, and then you cross your fingers, right? That's like really old school and frankly stupid. Especially at the early stages of startup investing, most of the people are angel investors like me. We're actually interested in this stuff. We do this actually kind of for fun, right? And we want to meet people with interesting ideas, and we want to help. And yeah, we might have some money too, but what we're really looking for is to expand our network and our own activities and help people at the same time. So that means you got to find people that you want to hang out with. And that's who will write your first checks. The idea that you can kind of put a business plan together and then walk into some building and walk out with a check is kind of the old school version of like you're opening a restaurant in the 1950s and you need a construction loan, to build the building or something. That's old school. Fundraising is really about friends. And they don't have to be your best friends, but they have to be people that see your vision and appreciate your desire to change the world in whatever small or large way you have on board, and that believe in you. And believe me, you want them to be friends, because these people are going to be in your business. That's their business, is to be in your business, right? So you really want to find people that you'd be happy to hang out with and have a beer, because no startup is easy, and you don't want those people on your ass if you don't like them from the start. It's going to be hellish, right? So friend raising before fundraising. That's my suggestion for that. Um, let's see here. Okay, so plenty of plenty of questions here. Great, this is great. You're all feeling very shy today, though. What are we going to do about that? Well, Joe should be here soon, and we'll put him on camera if you guys are too shy to do it. But I'll tell you, the first priority for answering questions is if you want to jump the queue. At this point, we have so many questions. No way I'm going to get to even half of them. Come on camera, and then we'll talk. All right, that's how you get to the front of the line. Okay. So let me just back up here again. So we've got Yvonne and Miguel and Sandy took care of that. And I said hi to Josh. And there's Mr. LinkedIn user. Welcome, LinkedIn user. Nice to meet you. Let's see. NWA for Sunday. Hello, Scott. I need your book or books from other authors. Please connect me with online business. Cool. Well, go to Amazon.com. That's how it works. People often ask me, can I have a free copy? I can't even give you free copies because my publishers own those books, right? I don't own them. They're owned by my publisher. But they're only, I think, $9.99 on Kindle or something. I don't know, something like that. But I literally don't own the rights to the PDFs, right? Because it's a publishing deal. Okay. There's Sandy. Okay, Sandy's posting about his thing. Great. You're still working on that knowledge base, Sandy. That's good. Miguel, how early? We covered that. Hello, Dr. Denise. Nice to see you. Let's see. Miguel says, what do you look for in a crowded space like blockchain if the company is pre-revenue? Okay, good question, Miguel. So and this is wearing my investor hat here, I presume. What does an investor look for in a company that's pre-revenue? This is a great question, Miguel. Thank you for sharing that. Because it applies not just to blockchain, right? Every field that is worth doing is crowded. And honestly, if you think your field isn't crowded, you're wrong, because investors aren't looking at the way you define your company. They're looking at your company versus existing alternatives, right? There's almost no green field left, or blue ocean, as they say, where you can start something that's entirely new that has no analogs or comparables at all. It just doesn't really exist anymore. So if that's what you're thinking, you need to reevaluate, because investors, regardless of what you say, will look at your company and they will find 3 or 5 or 10 other companies that in their minds are pretty close. And then they will start comparing you, whether you like it or not, right? That's just the reality. So what does an investor look for in a space like this, or in any space, if it's pre-revenue? Well, what we're really looking for is a combination of things. And there's lots of articles about this online, but and let me give you some of the highlights. They are a good team, a good idea, a large market, a very large market. I'll tell you just real quick, venture capital style investors are not interested in a company that's only going to make $10 million or even $100 million sometimes. We need really, really big markets because we put a lot of money in over time and the shares get diluted. So you need huge markets to make a payback for a venture capital style investment. Okay, so I said team, idea, huge market, timing, right? What's the timing for this, right? If you tried to do a blockchain startup 10 years ago, would have been tough. You might be rich by now, but it would have been tough because nobody knew what you're talking about. If you tried a blockchain startup maybe in 10 years from now, in the future, it might be too late, right? So timing is really critical, especially with technology, because as we all know, technology rides adoption curves, and you want to surf the wave, not get crushed by it or miss it. Those are the kind of things which are all just what you would have thought, right? But here's the trick. What investors are really looking for is all those things plus grit. We want to know that you're the gal or the guy who's going to do this. And it's really hard to quantify. So you can read 100 articles online that they give you this checklist. But the fact is, we want to meet somebody and look them in the eye and say, okay, I'm going to give you money that I earned. Right? I was not born rich, right? At all, right? Every penny I've had, I have made. So if I'm going to give some of that to you, I want to have full confidence that you are going to kick some ass and make it happen and give me my money back. Hopefully times 10, if not times 100, right? That's what it comes down to. It's a confidence game, not in a con man, like ripoff sense. Well, maybe Theranos, right? But it's about confidence in the whole package. So people all the time want to nitpick this and say, like my pro forma projections were just like this, or I did all the things on the checklist. Okay, but you didn't convince me. right? It's sales. So any founder that thinks that they're not in sales is kidding themselves. You are in sales. That's what you do. You might be selling, they're not selling cars or socks or coffee at Starbucks, but you are selling the company and you as the person to make it happen. And that's really what we're looking for. And it's a unique combination. That's why you've probably all seen statistics like, only less than, 2 or 3 companies out of 100 are lucky to get funded, because 90+% of them don't have all those things at once. And that's what you need. You need all those things at once. And there's no real way to write a prescription for that. Okay, so let me pause for a second, because our friend Joe Daniels is supposed to be here by now. And I'm wondering if he's trying to knock on my door here somewhere on one of these other channels I have. Let's see. Kamel tried to join, but waiting for the host. Okay, well, sorry, Kamel, if you're watching, I don't know what to tell you. You are. Okay, well, I don't see Joe, so I don't know where our friend Joe is. And I apologize for that. Not sure why that is. Let me think what the best thing to do here is. Let me. I just emailed him about it yesterday, and he confirmed this morning. So maybe he's just running late. Let's give it another couple minutes. But I apologize if he doesn't show up. We'll try again next month. Okay. As you can tell, I got plenty to say if that's helpful anyway. Okay. Let's see. Yvonne says, I did a lot of Googling already, but I hit the nail on the head. Okay. Awesome. Good. Okay. Let's see. Amazing experience already. Well, thank you, Joshua. Crunchbase, Miriam. Good suggestion, Yvonne. Yes, Crunchbase is a good resource for finding investors. It's not free. Any good resource probably isn't free. PitchBook is another one. PitchBook. You could look at that. This is, again, along the lines of finding investors. Chris says, can you advise how to select a patent attorney? Chris, you've been here before. Your name sounds familiar. Chris Pease. Okay, so how about this? Somebody turn on your camera. This is not fun. I want to talk to somebody. Gerard, nice to see you. I saw your email. Let's see. Well, Gerard, I think you sent me an email or something the other day that said you guys had raised some money, which is fantastic. Like $1 million, I think, which is super. Very, very good news. Everybody congratulate Gerard. Let's see. Cool. Hey, nice to meet you.
Good to meet you.
What did you have a question? What's your question? We'll try to do another one here before Joe shows up.
Yes, I'm thinking about doing a space startup, and
Okay.
I'm here in Orange County.
Oh, great.
So I wanted to know if you know any resources that might be good for me to use. I was looking at the Founders Institute this year. They're doing a space tech program.
Yes.
But it doesn't start till May, so I have some time to look around, right? And so yeah, that's what I was wondering.
Okay. So I don't. So let's hold on. Sorry, I got a lot of windows open here now all of a sudden. Okay, so space. So I don't know much about space in particular. I could give you resources in general. Let me just think. Space. Are you near Long Beach? Which end of Orange County are you in?
I'm in Irvine, but yeah,
okay.
I mean.
Well, there's a new accelerator called the Long Beach Accelerator, which is getting active. They just announced the other day that they had some cool new program with like $500,000 grants. And I don't know that they do space in particular, but Rocket Lab is up there and
right.
SpaceX is nearby. So maybe more than Irvine, right?
Right.
So that might be worth a shot. You could just check that out. Andrea is the director. You could use my name if that's helpful. But I don't know space specifically. But in general, what I would do is what I was talking about with Miguel a few minutes ago, which is get out to events and mingle with people as much as you can, because you don't know who's who, right? Space is still at an early stage. Well, that's not quite fair. It's not early stage anymore. But if you're early stage, you need to find that match, the Goldilocks match, right? Not too big, not too small, not too far away, not too close, all that kind of stuff. What kind of other research have you done already?
Well, I did. I am looking at a Cal State Fullerton incubator.
Okay.
And the OC Startup Council. Of course, they have a lot of events. So
yeah.
With COVID, I haven't been too active. I used to go every now and then, but I've been looking at that to try to see if if there's something live that I can attend, or even an online event.
Yeah. Okay. Well, the Orange County Startup Council is me, right? I run that.
Okay.
yes, we're all trying to get back to events. Everybody wants to start having more events. The COVID has
Right.
crushed everything, right? So as I mentioned earlier, don't know if you're on the call yet, but March 9th is going to be our next masterminds meeting, which is these workshops that I talk about. We've traditionally done those in person, but they're now on Zoom. So you'd be invited to come to that. And the purpose of those is to network and make friends and start building the kind of relationships that I know a lot of first-time entrepreneurs don't have. So I would look at that. I would join the newsletter list. It sounds like you might already be on our list.
Yeah.
And just watch. I mean, there's new stuff happening, and I think I'm crossing my fingers that there's going to be more of all of that. So I'm sorry I don't have a more specific answer, but if any of you who are watching have suggestions for Curtis about space startups, please, answer him in the chat room or follow up with him via LinkedIn, and I will keep thinking about it. Yeah, nice to meet you.
Good to meet you.
Go Orange County. All right, let me just see if Joe has shown up here. Oh, there's Joe. Excellent. Okay, there's Joe, our special guest. Okay, nice to meet you, Curtis. All right, and this is our guest, Joe. So, hey, Joe, sorry about that. There was something wrong with the link, that internet thing, whatever. Sorry to keep you up. All right, everybody. So this is a guy who actually knows a bunch of this stuff, even more than me, and he does this full time. He's got like a black belt in venture capital financing, and so he was going to join us today to help with some questions. I know we have one question already, Joe, about how to find a patent attorney, which I'm sure you'd have some insight on. And then I can, if you start talking, I can scroll through the chat room and find a few others. But first of all, Joe, thanks for being here, and maybe you can introduce yourself to the crowd.
Yeah, sure. I'm Joe Daniels. I'm the chair of our emerging company and venture capital practice in McCarter and English, which is a full service law firm. About 175 years old and 400 lawyers, and we basically have a department for everything a business needs, like real estate and IP, litigation, and anything that a company would need. I'm in the corporate department, so that means I focus on formation, financing, growth, and exit. And what that means is helping a company form up the correct way, raising successive rounds of angel and venture capital financing, acting as the outside general counsel to help them manage their costs of the other very expensive lawyers within a big law firm, and getting that cost sort of effective, and then helping companies grow through acquisitions and partnerships and commercial agreements of every type, and then helping them exit through M&A or IPO. We're highly ranked in the pitch book in terms of the number of angel and venture deals we do every year. For example, we did about 187 deals for over $8 billion in 2021, and we're on the same clip, in 2022. If probably, we're going to do more probably. And I've been doing this for 26 years. I come from Orange County, Huntington Beach specifically, and I went to UC Berkeley and USC, and I started out. I joined the group that took Netscape public and sold it to AOL in the Silicon Valley, and I've done about 25 IPOs and follow-ons, scores of M&A deals, thousands of financings, and I focus on high-growth sectors like tech and life sciences.
So there you go. This is a guy who's seen a few things. So Joe bills at a very high rate per hour, so we're lucky to have him here. But I should say they offer nice deals for early stage startups who need a hand as well. So, but we appreciate him being here. So let's turn on, Chris, I'm going to turn on your camera again, and let's talk about your question about patent attorneys. And if other folks, specifically if you have legal questions, we're going to focus on that for the rest of the hour, if you don't mind. So Joe, meet Chris. Chris, meet Joe. Go ahead, Chris.
Hi, Joe. Yep, thanks. This is Chris. So I'm interested in patenting some ideas within the world of ad tech. And how do you approach basically kind of interviewing attorneys to see if they operate in the space appropriately, kind of without giving too much away about your idea before it's protected?
Well, I wouldn't worry too much about talking to attorneys about your ideas, because they have the highest duty of confidentiality. And if it were ever to be found out that they had disclosed something that someone who was like entertaining potentially hiring them, had told them in an interview or something like that, then that would be the end of their career, right? They'd be disbarred. It would the ramifications are so serious. We never do it.
Okay.
And as soon as you are talking to somebody with a view to potentially hiring them as an attorney, that duty of confidentiality kicks in. But that being said, how do you choose, right? So in my opinion, and I've been doing this 26 years, right? I think that you should pick patent prosecutors inside one of the top 20 firms that focus on emerging company and venture capital. And the reason why is because again, you're going to, and to go through a corporate person like me, I'm biased, and the reason why I think that is because they know, if the patent prosecutor knows it's coming from me as a referral, that means there could be a lot more referrals, because all I do is tech companies and life science companies, right? It's an infinite chain of patent prosecution.
Yep.
So that means they're going to not churn and burn you, right? They're not going to try to get you to file as many patents as they can, think up for you to file.
Right.
Because it's like you're trusting the mechanic to decide how many things need to be serviced, right? It's a black box of pain. So, and if you go to a boutique patent shop, that's all they do is patent prosecution and litigation. So there's nobody they're beholden to accountable to treat the client right.
Yep. Okay. Thank you.
Yep.
So that's a good start and good advice for sure. Okay, so who else? Let's see, Beverly or other folks in the waiting room there. If you have a legal question, Zubin, I see your message there. I don't know, that doesn't sound like a question. So if you have a question for Joe, let me know. If you can put it in the chat room of the video, the private chat there, so I can help screen a little bit, that would be appreciated, just so we know I can run the show here effectively. Okay, so there was another question, Joe. Let me find that there in the chat. Sorry. Okay, so this is a general one, but Joe, what are your opinions on incubators and accelerators and the equity that they take in exchange for services? Or do you have any advice in that direction?
Well, I mean, so if you look at, for example, if you get into Y Combinator, I don't know anything about the quality, and people, I've interviewed people who were my clients who went through it, and they say, yeah, the mentors are good and the advice is good, and sometimes they don't like the advice, but the main thing that you get out of that is you get sort of a brand, a stamp of approval, because you've gone through the filtering process of their applications process. They take in thousands of applications and they narrow it down to 10 or 20, and then you get the investment dollars, and then you go do a demo day, and you get introduced to hundreds of investors, and that usually leads to some traction towards if not actual checks, then learning how to restructure your pitch so that you can go out and get checks from appropriate investors. So to me, it's a good way to get yourself ready for that. And you can't discount the ability of accelerators to help you refine your pitch, both in the the oral format and the slide, the slides in the deck, because that's usually a big part of every accelerators program. But there's a lot of accelerators. They're not all the same as Y Combinator, and there are rankings by percentage of cohorts that raise money within, say, 12 months after the graduation, and that may help you decide between different accelerators.
There you go. That's good stuff. Well, let's bring some other folks in, and I'm having trouble doing 5 things at once, so let's have these folks come in, and I want to just have you each just tell us out loud. Hi guys, so this is Various and Beverly and Zubin. So you can each tell us what legal question. Do you have a legal question? I'm just trying to screen here in real time. So how about first, Beverly? What did you want to talk about today?
Yes, Yes, my product is targeted to the durable medical equipment market.
Okay. So not your whole pitch. I'm just trying to screen. So do you have a legal question?
I do.
Okay.
So in order to figure out how I need to work with the sales people that are my target audience, I wanted to contact them and ask, what do I need to know in order to work with you to become a part of your product portfolio?
Okay, hold that thought. Let's hear what Various wants to talk about. I'm just trying to prioritize here, guys. So, okay. Various, what did you have on your mind?
Yeah, question related to crowdfunding. When
cool, that's perfect. That's great. We'll get there. I love that. We'll get there. Okay, Zubin, how about you? What did you want to talk about?
No, I don't really have a question regarding the legal issues, but the service that we normally provide is what I was here to offer about the software development stuff. but
Okay.
honestly don't have a legal question for now.
Fair enough. Thank you for being candid. You're welcome to talk about that in the chat room. All right, so we'll move Zubin off camera, and then let's go to Beverly. Sorry to cut you off, Beverly. Just trying to herd the cats here. So, and then Various, we'll come back to you too, talk about crowdfunding. Okay. All right, Beverly, all yours.
How do you present your product when the people that you're presenting to will not sign an NDA? I've talked with several durable medical equipment suppliers trying to figure out, not make a market pitch, not make a product pitch, but just try to find out, what do I need to know so that when I'm ready to pitch to you, I have all my ducks in a row.
Yes.
Yeah.
And I've been told they will not sign an NDA.
Yeah, well, the short answer is that you want to disclose to them everything that's publicly available about your company and nothing more. You know what? If you can still get them over the line without disclosing anything that is not either confidential or a trade secret, you definitely don't want to disclose any trade secrets without an NDA. And people sign all NDAs all the time, and they still don't tell people the trade secrets. But there's that stuff in the middle, that's not public. It's not on your website and can't be found out by buying your product or service, and is not a trade secret. That stuff in the middle there, confidential things that maybe you wouldn't want to know about it. You have to choose which of those you talk about.
And it comes down to the reality that you got to share something, and it's like dating, right? You got to share a little, and they share a little back, and you got to build some trust. The legal documents are the last resort, right? Ideally, right? I think Joe would agree. You don't want to be relying on the things you sign. You want to be relying on a relationship where you really trust the person.
Drinking water before. Yeah, you might rely upon a Vladimir Putin technique and try to use a little misinformation. Just omit key facts.
Right. Yeah.
I have a second question too. I'll wait my turn, but I have a second question too about provisional patents.
Okay. All right. Well, let's hang on to that. Thank you for recognizing there's other folks here. Let's bring Various was waiting nicely. Thank you, Various. Let's talk a little bit about your crowdfunding question.
Okay, so I'm building a product for local startup ecosystem and moving into a phase where I've actually funded a lot of it out of my pocket, but want to start like a crowdfunding campaign, not equity crowdfunding, but offering perks nonetheless with the platform that I'm building. What legal issues could I come by doing something like that?
Yeah.
So it's basically like sponsorship, getting sponsors.
Offer. What kind of perks are we talking about?
Memberships, lifetime, marketing type things related to the platform. Just a bunch of lists of different perk levels that I'm doing. I've done this before, but for a nonprofit organization, doing like WordCamp conferences, WordPress conferences. And I've done this before, but their structure is more of right now, I think it's public benefit corporation structure. For what I'm doing right now is just sole proprietor. So I'm offering pretty much services in exchange for marketing type services in exchange for sponsor levels.
Okay. So are you talking about doing this through like Kickstarter or which?
No, building out the entire platform kind of on a separate website. It's a platform, Start Empire Wire. It's the website. But
yeah, the key that if you're doing it that way, then what's key is your terms of use and privacy policy, right? Okay. You just have to make sure that disclaims liability. Does not have you indemnify for anything, has them indemnify for everything. And most people don't even read it, and they just start clicking through and. They fund these projects in exchange for perks, and then there's nothing they can do if it doesn't turn out in their favor.
Okay.
And you want to think about, you got to make sure it's not a sweepstakes or subject to gambling and sweepstakes regulation.
What is the difference?
Well, you probably know what gambling is. Sweepstakes is where, you just like participate in a like the Publishers Clearinghouse sweepstakes. Okay. Right? You have to go through effort of putting postage on some mail and mailing stuff in.
Right. Okay. No, it's not a sweepstakes for sure.
Yeah.
Okay.
Good.
Awesome. Thank you.
All right. Yeah. Nice to meet you.
Nice to
All right.
meet you as well.
We're going to bring on Mark and Sam. Look like they can. You guys just give us a preview of what you want to talk about as well, and not the whole pitch, just the quick version. How about
Yeah.
go ahead, Mark. Yeah.
Okay. I have a residential stovetop fire suppression system. Works really good. Battery operated. Mounts over the stovetop right underneath the microwave or vent fan, and activates on temperature. And we have patents.
What's your question?
The question is, we have patents in the U.S., in Europe, and in Canada.
Okay, hold that. Sorry, hold that. I'm just trying to figure out who's who here. Okay, just hang on.
Okay.
So Sam.
Mark.
Yep. Thank you.
Right.
Sam.
Yep. Hey.
What's your question?
This book mentions when negotiating with an attorney that they should be willing to cap their fees up front. I just wanted to get your thoughts on that.
Okay.
Yeah, Bradfield, Jason Mendelson, I think.
That's correct.
Yeah, that's right.
I mean, those guys are out in the middle of the Rockies, and they basically they have something in for big law firms, except for Cooley, and they like to cap. They like everybody to cap their fees at super low amounts. But basically, what they're doing is they're talking the investor side book, which is because usually they're venture funds, and they submit term sheets to companies. And so their preferred reaction by the company is to not negotiate it, just sign, or negotiate it very little. That's slightly worse for them. Or if it's going to be heavily negotiated, eventually give in, right? And then for the documents to be drafted by company counsel exactly consistent with that investor favorable term sheet, sign and close. But in each of those stages, when you're negotiating the term sheet or negotiating the transaction documents, investors counsel can and the investors can try to take advantage of the founder, and they need good counsel. So we tend to provide reasonable estimates for like note and safe financings. Like, I mean, we can draft a note, convertible note, or a safe for like $200, right? It's just a form, and depending upon what the terms are. And if the investors don't have any comments, then that's it. Pretty low fees. But if they do have comments, then we usually charge by the hour. But for like seed preferred financing, it's like $5K to draft, $15K to close if investors counsel doesn't give you a hard time. But it can be as high as $50,000 if they give you a hard time. It all depends on the investor and the investors counsel, how much diligence they do, how much trench warfare they play on the documents. Right.
Joe, would it be fair to say then it sounds like what you're saying is capped fees are a great idea, but that assumes that nobody is going to have to do anything extra. There isn't going to be any negotiation. And that wouldn't be fair to the firm if you do a capped fee and then it turns out you have 47 days worth of changes and back and forth. Is that
right. And since the investors usually are the ones who first propose the terms, they prefer a situation where there is no negotiation. That's why they want the caps low, so that the lawyers will work within that very small amount of scope, and therefore not negotiate the terms that are favorable to the investor, giving them a better deal. That's what I mean about them talking their own book.
Right. That makes sense. Yeah. The real world collides with theory, right?
Well, what's funny is that the prices they quote, they said it should be about $5K for like an early seed draft. So a lot of their stuff was correct. I was just curious about the caps, but that makes sense what you're saying.
Yeah.
Yeah.
Great. All right. Well, nice to meet you. Join
Cool.
the email
Thank
list.
you.
See you again. Okay, Mark, you're up. Let's hear some more about your international patents.
Yeah, we've got patents, approved in the U.S. patent number. We've gone to Europe and Canada, but like Japan or Korea, they want like $10,000 for every country. Should you pay the money and keep going, or are you protected with just a U.S. patent?
Well, I mean, you want to talk to a patent prosecutor that you trust about the answer to that question. And I'm not one, but what I would say is that you want to avoid the inventor's trap of spending a gigantic amount of money on patents and international patents without a path to commercialization to pay for that, or to make money off of all that. Otherwise, what's the point, right?
Well, we're on our way. I mean, we've got pre-orders of 88,000 units. Cost is $60 to make. We can sell them for $200 up to $299. So we think we have a really good market because we can stop half of all residential fires. But is it necessary to go right now with all the countries, or do we have a time?
Well, I mean, so if you think about it practically, then that's something the patent prosecutor can talk to you about, but I'll give you an example. So all those countries are first to file countries. So if you are doing well in the US and some, what countries you say, Japan, EU?
Japan, yeah.
Yeah,
Japan.
a clever Japanese person or EU person notices this on a trip, or is doing market research with their team here, and they see the product, they can go and they can reverse engineer it and then get a patent on it in Japan, and then you can't sell it there without infringing their patent, and they'll sue you for patent infringement.
Yeah, and
Right?
then
I mean, that's the reason.
China is another whole story, but we won't even go there today. So
China's a whole nother story. I mean, the only way you can get protection in China is to file the patent, right? Like if you manufacture it there, if you sell it there, it's probably going to get copied by somebody else, and then they'll file the patent if you haven't already.
Yeah. Okay. All right. Thank you.
All right.
Yep.
Nice to meet you, Mark. Go ahead and join the email list, and we hope we'll see you again some other time. So
All
we're going
right.
to bring Beverly back because Beverly had a follow-up question. And go ahead, Beverly. The mic is yours again.
Thank you. I was wondering what I can't seem to get a straight answer on provisional patents.
I'll give you a straight answer.
Yeah. I'm just trying to figure out, when do I file? When my design is absolutely ready to go into manufacturing, or am I just concerned with the idea?
What's the question?
When is the correct time to file a provisional patent?
Okay.
Because I have had attorneys tell me I really need to wait until all of my design has been, because it's a device and not a software tool. It's a hardware situation.
So
I need to file when it's done.
Patents?
Pardon me? I'm
You're
sorry.
talking about a design patent rather than a utility patent?
What is the difference?
The design patent basically patents the design of the product, as opposed to a utility patent, which patents the functionality and the way that the product functions.
Okay, so yes, it's the design.
Okay.
It's the design.
Okay. So, I mean, I think what you just said, the patent prosecutors are telling you, is the opposite of what I understand. I mean, to me, a lot of startup companies will file a provisional patent because they can describe the design very broadly. It's harder to describe design more broadly than the utility. But and then, if you want, within a year before you file the full design application, you can fill in the blanks, create, add more detail, pivot as it were, and flesh it out after you further reduced it to practice and got feedback from customers and things like that. So I see it as less permanent, more of a stopgap. But frankly, I'm not a patent prosecutor. I think you want to talk to somebody that you try, and I'm happy to refer you to someone that you can discuss it with.
Thank you very much.
All right. Nice to see you again, Beverly. Okay. So, ladies and gentlemen, this is Joe Daniels. Sorry, let me change the caption again. He's a friend of ours, as they say. Been very supportive of the Startup Council's efforts. We appreciate that. I think we have one more question, Joe, which is Gerard couldn't get his camera to work, but he's asking about international outsourcing software development, basically. So his question is, while IT development can be less expensive overseas, how do you deal with legal enforcement, such as NDAs and IP protection? Or do you suggest staying in the US initially?
What kind of operations are you talking about doing overseas?
That's all I've got. IT development. I'm not sure, actually. High level here, I guess.
Yeah, I mean, the classic dev shop in Ukraine or India, right? So, I mean, the way we typically do this is or I think that let's take it from both sides. The way the Indians will typically propose it be done is they've got a company over there, blank, private, limited, and you contract either directly with that company through an MSA, and that MSA says that you own the IP that you pay for. right?
MSA, folks, is a master services agreement.
Master service agreement, right? But you have to also make sure that Indian company or Ukrainian company, same thing, has the right agreements with each of the individuals that are actually providing the service, that are actually consulting you and engineering the code. Because if not, then you just have a shell company assigning something they don't own to you, right? So I want to make sure that there's the chain of IP title is secure all the way to your company. That's the key. Now, how do you deal with enforcement? Enforcement of contract is very difficult in India, but at least you have 5 years later, you'll be able to assert your IP rights. And what's more important is that having those contracts in place will make investors and potential buyers of your company happy. If the company does well, then you can actually get Indian lawyers on the ground and sue people for patent infringement, for different types of IP infringement. Same thing in Ukraine. Maybe Ukraine may be more difficult in the coming months, but previously it was fine.
In other words, it's difficult, Gerard. You're right to be careful. And I guess the part that isn't addressed there is the cost differential, right? So what you're really doing, practically speaking, as a founder, is balancing the cost savings you would have by going overseas, but perhaps putting yourself in a less legally enforceable environment versus paying more here in the States and hopefully having recourse to the United States court system. So those are the kind of trade-offs. That's why you're the boss, right? As the founder, and doing both of those, it's the old joke. You can have good, you can have fast, or you can have cheap. Pick two, right? You can't have all three, right? So that certainly applies.
They use that overseas dev shop for the initial development, and then they start bringing people on board into the US, even maybe moving some of those people who are overseas to the US, and then effectively replacing that. And so only the old IP in the software or whatever is being developed is subject to those risks, and then it gets replaced over time.
Yeah, good point. All right. We're already almost at an hour here. I'm sorry we got started a little late. I'll take a few more questions, but I know Joe's a super busy guy, so I told him half an hour. He's already gone over. So if we were here, we would applaud. But thank you, Joe. Nice to see you again. Appreciate your support. Let me put his title up there again. If you need to reach him, you can reach him through me, or you can find McCarterenglish.com or Google him on LinkedIn. Or, by the way, all of you are welcome to connect with me on LinkedIn, and I can put you in touch with Joe if that's helpful. He's a specialist at this stuff, obviously knows his stuff, and would be happy to hear from you. All right. So thanks, Joe. Good to see you. Everybody stay on. I can do a couple more questions if you'd like. But thanks, Joe. Thanks.
Yeah, thanks.
Right. Good to see you. All right. So that's our friend Joe Daniels. And as a reminder, I'm Scott Fox. I'm the head of the Startup Council. I do this, and I also run these masterminds workshops. And I wrote these books, and I do all this kind of stuff just basically to help you guys, because I enjoy helping early stage entrepreneurs. And I think together we can make a difference in the world, as I said at the top of the show. So before we run out of time, I thought we would have a little discussion about Rebecca's question, I think, about negotiating equity. Thank you for all the chat messages. I'm having trouble keeping up with them. If you want to talk about, any tips on negotiating equity with investors. So this is an area, this is kind of my specialty. Sneak preview. My next book is going to be about this. So I think about this a lot. And it's been interesting for me personally, because my personal evolution is probably what a lot of you are on the same road. I was a founder 20 years ago, raised venture capital, started some companies, did well with some, one almost bankrupted me, and, up and down along the way. But, over time I've done well. And now I spend most of my time investing. So I literally wear both those hats. I'm the entrepreneur, but I'm also now mostly an investor. So I see both sides. And I didn't come from money, and I don't have resources from outside that are, this is all me, fortunately or unfortunately. So I think my perspective is a lot like you guys, and that's why I'm going to write another book specifically about this topic. Anyway, if you think that sounds helpful, let me know. Tips of negotiating with early stage investors. So the main thing I already talked about, which is the biggest mistake I see early stage founders doing. By the way, if you wouldn't mind liking and sharing this kind of stuff, the only reason I do this is to try to help more people, right? I'm not making any money here. And I would love to have you like it, subscribe. If you're on LinkedIn, say hello, follow us. If you're listening to the podcast version, share that with somebody. You get the idea, right? It's the social media. If you would do that, please, that would really help. Every one of those little comments tweaks the algorithms and means that we can reach more people to help do this. And I especially do this for diverse and early stage founders who are outsiders like I used to be and become insiders. And especially if you're a minority or challenged in some other way, that's really why I do this. So anyway, if that sounds good to you, please like and share and subscribe. So sorry, back to negotiating. So negotiating tips, the biggest thing is to find the right investors, right? This is really overlooked and I'm not sure why, but most of the advice is kind of so focused on the entrepreneur and what the entrepreneur's plan and product market fit and finding customers, which are all, of course, super important. But like I talked about earlier, you got to have the whole package, right? And part of that whole package is the ability to deliver on all of those things, but deliver them not only to the right customers, but to the right investors. You've got to find investors who really do what you do. It's just like lawyers or doctors, right? If you break your ankle, you don't go to an eye doctor, right? And I hear this with lawyers all the time. If you're raising funding, don't go to your uncle who's a divorce lawyer, right? You go to a specialist like Joe or other attorneys that I can recommend to you guys. There's a lot of good attorneys in the world that do this all the time, right? So you want to find the people that invest in companies like yours all the time. Why? Because it'll make your life so much freaking easier, right? If you go to a late stage, like a firm that invests in Series C industrial, and aerospace startups, but you're a pre-seed software startup in the media space, like you're wasting each other's time, right? And that's why so many entrepreneurs get frustrated when trying to raise money because they're just knocking on doors that are not designed for them. So to answer Rebecca's question, if you can find the right people, the negotiation gets a lot easier, a lot faster because they already speak the same language, and it makes it easier to build the trust that you can trust each other. Now you still have to negotiate, and you still need somebody like Joe or another qualified attorney who specializes in this stuff on your side. And then you need to go through the term sheet in detail. You need to look at the stock size of the stock option pool and the pro rata rights and the liquidity preferences. And there's there's all kinds of this stuff. Are you going to use a safe note, a pre-money safe or a post-money safe? Like all of these are real issues that can truly affect the financial outcome of your deal. But they're also complicated enough that people like Joe and me, we do this all the time. I can't even do that in 5 minutes for you, Rebecca, right? But the point is, if you get on the right road with the right kind of fellow travelers who are interested in this space, you'll get closer faster. And then you do need, you need to read a book like the one that Sam showed, or listen to stuff like I'm talking about. And I'll be happy to talk about this more in other forums. But the key is to get oriented with the right partners first. And anyway, I'm repeating myself, but I hope that's helpful because that's the piece a lot of people miss. They think it's all about getting their plan ready and then spray and pray, right? Send it to everybody. And, if I send it to 1,000 people, one of them will invest. Okay, that's not good for anybody, right? And it not only wastes your time and their time, but it hurts the other entrepreneurs who might have had something legitimately interesting to that firm, right? And you weren't appropriate for that firm. So if we all just dial it back a little bit and focus, do the research up front, I think you'll get a much higher hit rate. So anyway, it's a little personal rant of mine. I hope that's helpful. So I want to talk about our next event is, I believe it's going to be March 9th, which is the next Masterminds workshop. And that's where we can go into more depth on these specific things. Like our friend Sandy was here. He wanted to talk about his knowledge-based startup, or Rebecca has more questions about this, blah, blah, blah. These kind of questions are all totally legit. At those events, it's a Zoom meeting, and it's not just me and a couple people on camera. It's everybody on camera at once, and I moderate it so that we work through people's questions. And we'd be happy to have you there. Get on the email list. Let me put that back on. Where's the email list prompt? Get on the email list. And that way you'll hear about these things, and we're trying hard to help you. And I hope that this was useful to you. Like and share, and go out and conquer. That's the job. That's the homework. That's your homework till next time. Okay. Go out and conquer. So thank you very much for your time. I'm Scott Fox, and hope to see you again next time. We do this once a month. This is the first Tuesday or last Tuesday? Fourth Tuesday, I think it is. I think it's the fourth Tuesday of every month, and we'll be here again, and hope to see you again too. And hope this was useful. Please like and share and let me know. All right. Thanks. Good luck with everything. Bye-bye.